you don't realize how attached you are to this thing. Even though I had built a business that I thought I hated, I could not let that thing go. Like I would never tell an entrepreneur to sell their business unless they had something else to put their energy toward. If you don't, that's a path to identity crisis and depression. There's 4 questions I think every entrepreneur should ask themselves before starting something new. Who am I trying to help? Do they need help? Do they want help? And then can they afford it? I'm trying to go from a very, very blue collar to pretty white collar, like real estate investor. Making the wrong choice is better than making no choice. You either win or you learn. Test this new market with a small amount of capital that they can afford to lose. If it doesn't work out, no harm, no foul. They move on to the next thing. They just try a couple things. When they find the one that resonates with them, that they know works, understand it thoroughly, then they go and they shoot all the cannonballs in just one direction. So you really have 2 customers. You have your investors, but your tenant is also your customer. You have to keep your tenants happy. The success of the deal hinges on the integrity of the operator.
You went from being owned by your business to owning apartment buildings. Can you talk a little bit about like what that means?
Yeah. So yeah, that's an interesting, place to start. Some of the lowest points in my business were sort of a wake up call to the fact that my business was controlling my life. I love the thought of being a servant leader, but I felt like I owed my employees, my customer. I had all this responsibility on me, and not that responsibility is all bad, but it just seemed like it was a burden, and it wasn't fun anymore. It had just developed into this monster that I couldn't sleep at night anymore, and I just didn't enjoy my day to day. And so yeah, it's really meaningful now to be involved in the ownership of some passive income streams in some apartment buildings. But it's a step that about anybody can take. With a small amount of capital, you can get started down that path, and that's what we try to provide for people, actually.
Sounds kind of like the rich dad, poor dad example. And like many of us, you started in the service industry and ended up in multifamily real estate. Maybe not like many of us on the latter part there. What was that turning point?
Well, it's interesting. It kind of, my faith actually ties in to the turning point, because I had an interest in real estate for a long time. I had bought some farmland. We still own some today. I love the farming lifestyle and the security of owning some land. But we knew we wanted to sell the business for a while, and we also knew we wanted to volunteer, serve some time through our church, and we just didn't know what the timing was on both of them. And there came a point where we decided, my wife and I decided, that we were going to kind of leave it in God's hands. And I know this isn't a religious podcast, but it's part of the journey for me. And we decided to commit. And so we put our name in for the mission field through our church. And I honestly feel like, I felt like the Lord helped us sell our business. And so, I had made some passive investments. I started to make some more. One of the big concerns with that was, when you sell a business, you have some tax problems. And we didn't know what that would look like when we sold the business. We were kind of worried about that. That was one of the things that was kind of starting to hold me back a little bit. And it seemed like real estate was sort of the answer for all of that. And so we invested, we partnered with some others on a large property. We invested passively in some different properties across the Sun Belt. And then we actually, funny, I mean, it's a totally another story, but we ended up actually buying a service station as well to help with taxes. So that transition was, it was faith, and it was taxes, and it was trying to find our way through selling a business is actually really what kind of led us to real estate.
Could you expand a little bit, Elijah? Because I'm thinking there might be some people that are thinking that they want to sell their business, and there's going to be barriers that I'm sure exist in multiple industries. What are the sort of main things people need to think about when they're trying to sell their business? What would you say they need to focus on or be aware of?
Man, I think the thing that was the most surprising to me was how emotional it was. You know, us entrepreneurs, we start something and we try to build it. We pour our life and heart and soul into it, blood, sweat, and tears. And you don't realize how attached you are to this thing. You know, even though I had built a business that I thought I hated, I could not let that thing go. And so that's why for me, the probably the biggest key was having something else to put my energy towards, both through mission work through our church, and then also starting another real estate business was like was paramount. Like I would never tell an entrepreneur to sell their business unless they had something else to put their energy towards, because I think if you don't, I just think that's a path to an identity crisis and depression. And you know, I struggle with some of that stuff even after I sold it, just because it's like, man, is this the right thing? But that's just me. You know, maybe, you know, other people are maybe less emotional than I am, but for me, I was surprised by the emotions involved.
I've heard that a lot with people saying that it doesn't really matter what age they are, even if they're retirement age, whatever age that is for different people. They've sold a business and then all of a sudden they think, what do I do? Where's my purpose? Where can I add value? How can I be productive? And those things are all wrapped up in our business that might cause stress in their own way. But when it's all gone, it can be something that actually is difficult. So I like that idea of having the next thing lined up, or at least something else that you put your energy into.
Yeah. And, you know, I think there's the you know, when I started this Legacy Way Holdings, um, I wasn't sure what it was going to turn into yet, but there was there's a few different questions that I asked myself, and I think I actually wrote them down so I could share them with you guys. Um, really, they're really four questions. You know, there's kind of some nuance to it, but there's four questions I think every entrepreneur should ask themselves before starting something new. Number one, who am I trying to help? And that better be meaningful. Like it needs to mean something to me. Do they need help? Do they want help? And then can they afford it? And so for me, what we're doing now, you know, I'm trying to help blue collar entrepreneurs and founders invest in real estate. And for some reason, peace of mind has always been what I've tried to help people with. You know, when I was in the service industry, there's a lot of stress involved, and I didn't really have a lot of time to, um, you know, think about anything else. Think about investing. Think about retirement. Think about, you know, creating a trust for if we ever, you know, God forbid we ever pass away, right? Which I mean, we all are going to anyway. But um, and so my goal is to help, you know, blue collar guys invest in some of these institutional opportunities that they wouldn't have access to otherwise. And you know, I think there's a need, and I think from what I've found, there's a desire for this service, and there's a lot of money in blue collar businesses and trades that, you know, the institutions never see because it's tied up in family businesses, and so I think they can afford it. So those are the questions I ask myself.
I'd like to take a somewhat of a pivot, maybe not too much of a detour. You brought up faith earlier about your orientation in making a decision. And I had a coaching session earlier today where my coach asked me about like if I needed a compass to make a decision, and that kind of got me thinking philosophically about like what is a compass. It's finding a waypoint. It doesn't mean you have to go toward that waypoint. It's just an orientation device or tool. Maybe you don't want to go true north, but at least now you know where it is, and you can kind
Mm-hmm.
of use that as an anchor. Um, but usually when I say I looked at my compass, it doesn't trigger people. It's not a taboo. Why do you think faith is sort of this thing that needs to be caveated?
Ooh, that's a really good question, and I don't know if I have a good answer for it. That's kind of a question I've asked myself too. You know, when I started the business I'm in now, well, and the previous business too, I always, in my mind, I was always like, I'll keep my faith over here, and this is the business. I'm not going to try to market to Christians, or I'm not going to try to, I don't want to mix the two or make people think that I don't want to cheapen my faith by trying to, I've heard of a guy that markets to Christian bros, and I don't want to have anything to do with that.
What is a Christian bro, by the way?
I don't know.
Is
I'm
it
not
like
real
a
sure.
gym bro that wears the cross around his neck? Is it
Could
something
be,
like that?
could be.
Or
I'm not totally positive. Not my style. I mean, no judgment for the guy, but I've started to wonder a little bit if keeping those completely separate was maybe even a mistake, just because so much of the way I make decisions is based on my faith. I put a lot of prayer into every decision I make, and so it's like, why not be forthcoming about that? And I haven't done, like I say, I'm not interested in using it as a marketing ploy. But I don't think that's something that should be hidden or it's nothing to be ashamed of. Obviously, that's something I'm working on. I'm not sure. You look at somebody like a Dave Ramsey that has incorporated his faith into his business, and he views his business as a ministry. And it's amazing what he's done. He's helped so many people, and so it's something I'm thinking about and trying to figure out how to incorporate it without cheapening, either the faith or making the business seem like I don't want to scare people away or push people to try to. I have no reason to try to apostatize people through my business necessarily, but if we can use it as a tool to help people, then we want to do that. So
I think that thing of making a decision is better than making no decision. It reminds me of a silly thing. When I was a kid, it was at a pizza shop with my parents and my brother, and there was pistachio ice cream on the dessert menu. And we hadn't had pistachio before, my brother and I, as kids. And my mum said, "Oh, if you haven't had it before, I wouldn't try it because you don't know if you like it." And my dad went, "Well, then how then? They're never going to try pistachio then." Like, that's never going to happen. That's a cycle that doesn't work. You have to try it to know, is pistachio going to be my favorite flavor, or am I going to realize I don't like it? Makes the next choice easier. It's coming back to that analogy. If we want to bring this back to investments, would you take the same approach there? Do you think investments are a little bit of try it and see what happens, or is it a different approach you take there?
Ooh, that's a good question. I don't think I've ever been asked that. I think a little bit. People talk about diversification, and there's also diversification, right? But I have found that, there's a concept that Jim Collins talks about in one of his books. He talks about, I think it's in Good to Great, maybe, talking about great companies and what differentiates them. And he talks about bullets, then cannonballs. And I've sort of viewed my investing strategy a little bit like that. And the concept is basically this: a great company, one of the things they do when they're venturing into a new space is they take little shots with with a BB gun or whatever, and they test this new market with a small amount of capital that they can afford to lose. And then if it doesn't work out, that no harm, no foul, they move on to the next thing. They just try a couple things. And when they find the one that resonates with them, that they know works, understand it thoroughly, they know they can make a difference in the market. And there's, he goes through a list of all the things that when they make a decision, then they shoot all the cannonballs in this one direction. And that's sort of Warren Buffett's thesis too, is like, find what, something and understand, and learn everything you can about it, and then just go whole hog on it. That's sort of what I've tried to base my investing strategy on. I try to use my own money as the bullets. And so, I've invested as an LP in syndications with lots of different operators. to try to find out who the operators are as people, as syndicators. They're diversified across operators and demographic, or not demographics, but geographic locations, because I want to learn from my own smaller investments. And then, as we gain that knowledge, and as I learn from that, then we'll take investor money and put it with somebody that we know, like, and trust. And, we understand their business plan, and we know how they communicate. And so that, I don't know if that answers your question. That's how I view it. I view, yes, you do some trial and error with small amounts, and then you shoot cannonballs.
Makes more sense to do that than to just throw cannonballs in a direction and see what happens.
Totally.
So, out of interest, why apartment buildings as opposed to, or even actually, why real estate as opposed to maybe stocks or other asset classes?
Well, I have invested in a number of different asset classes. Like I mentioned, farmland, service station, tried small multifamily. I did an experiment with Airbnb, and I actually did fairly well in everything. I haven't, knock on wood, I haven't lost any money on a real estate deal yet. But I found that apartment buildings offer the scalability that I like. And then when you get into those bigger assets, I feel like the safeguards are better. If you're doing financing through a major institution like Fannie Mae, Freddie Mac, there's some safeguards in place. They do criminal background checks on people. There's you get into those bigger deals, and you have larger not institutions, but larger syndication companies with some liquidity, and they can bail a deal out if they need to. And they're professionals at what they do. So it's, there's that in different asset classes too. But I think, AI is not going to change the fact that people need a place to live. And we continue to be in a housing shortage. So I believe in the asset class long-term. So that's sort of the short, long answer. I believe in the asset class for a number of reasons.
I have a spicy question. Are you up for it?
Totally. Let's go.
How do you feel ethically about profiting off something so essential as housing?
Ooh, that is a spicy question, and I've not gotten that before. I feel like that's a tough one, because I feel like there's some misconceptions around that. One of which is that, there's these big bad developers that, and landlords that they buy all the assets, and they raise rents, and everything's too expensive. And one of the things that people don't realize is that the real estate industry is actually really fragmented. So there's a lot of mom and pops. There's the biggest corporation, the corporation that owns the most multifamily units in the US, it's a company called Greystar. Greystar. They own like a fraction. It's like 2%. I think it's less than 2% of the units in the United States. So it's very fragmented. Is there evil landlords that are taking advantage of people out there? Absolutely. Do people still need a place to live that's affordable? Absolutely. And so I think, you talk about ethically providing a place for people to live that's affordable. And I think part of being successful in this business, you really have two customers as a real estate investor. You have your investors. You have to serve your investors. You have to make them a return. But your tenant is also your customer. You have to keep your tenants happy, and you have to provide them a sense of community, and you have to provide them a great place to live that's not too expensive. And you will not serve your investors if your tenants are not happy. That's what I believe anyway. The tenant has to be served. And so, I view it as the opposite of that idea of, profiting off of people's need for a place to live. Well, I view it as a service, I guess. So,
Yeah,
I don't
spot
know
on.
if that's the right way or not, but we're not.
Like
Yeah, go ahead.
leading with curiosity, it's an important signal, an important BB to put out there and see what shakes up. My grandpa invested in apartments as well to great effect. I think each of us use our time and our strengths in different ways and find different rewards with that. If I prioritize video games non-competitively, I may not be able to afford one of your finer properties. Just for one example. Um, However, if it bothers you, if you're profiting too much, let's say, and you see this a growing homelessness crisis or what have you, and you feel called upon to address that, I think there's other ways that you can help and profit from people who really want the finer things. And it's like, some people prioritize cars or boats or houses or whatever. And so I don't see it necessarily as black and white categories of don't do or do, but more like, how do you feel about it? So I just was curious kind of where it landed for you, because you seem to be like principled, and that's, I'm here in Vancouver, and we have a situation it seems to be getting worse. I don't know, Los Angeles, many places around the world have something similar, and so it can be one of those like you're it's like you're hoarding all the water kind of thing, and it's like we all need water, and so it's like, well, there's levels and there's ways to do something, the how more than the what.
Mm-hmm.
Becky asked you a question earlier about selling a business that I thought was pretty interesting. And for many small business owners, there's a couple of kind of on ramps and off ramps. Going to the on ramp, I'd like to talk a little bit about raise. So you raised $1 million, and that was just last year, I believe. Now that can be pretty challenging. How did you go about it? What were some kind of lessons that you learned? Could you tell us a little bit about that process?
Yeah, for sure. Boy, I think the way, like, if you knew nothing about real estate and you wanted to raise money for a deal, and I don't know, I've never raised money for a business. I know there's a lot of people that do, but I think, from a real estate perspective, you know nothing about raising money for real estate. I'm actually a big believer in some of these mastermind groups. So that was how I got started, was joined a mastermind group. I'm in several now, and just built community with people in the group. Learned, you know, how to raise capital ethically and compliantly, and then started to build a network. Like your network is your net worth, they say. And so, I mean, I'm a blue collar guy. I started making phone calls and getting people, added to my network, and started sending some emails and kind of trying to warm up an investor base of sorts. And it's very clumsy, and still isn't, it's not perfect yet, but um, built up a little bit of a network, and ended up, found this deal, decided to pursue it, and started to send it out, and ended up doing a bunch of cold calling, even after the fact, because my network wasn't big enough or warm enough. Um, and on your first raise, you never know how much you can raise till you actually get started. There's a lot of people that'll say, oh yeah, I'm interested in real estate. Yeah, totally. I'll invest some money, and then a lot of those initial knee jerk yeses, won't end up following through. So that was a tough lesson, but um, I actually invested quite a bit myself in the deal, and so I was able to tell people, like, hey, this is a deal and a team that I believe in. I'm investing myself. I'm going to be the largest investor in my portion of the equity raise by far. Come along for the ride if you want. If you want to invest with me, I'm going there. You can come with me if you want. And I found that to be fairly effective. Of course, you have to have some money to be able to do that. So that might be the hard part, is have some money and then try to raise money. But that's what worked
But
for
you're
me.
putting your money where your mouth is, which I
Totally,
think is why that resonates.
totally, yep. By definition.
David, I didn't know if you had a follow up with that one.
No, you can go ahead, Becky. Thanks.
Cool. So you've mentioned syndication a few times. So for those that might not know what that is or how that works, especially from an entrepreneur mindset, would you expand a little bit on on syndication, and why should entrepreneurs be aware of them?
Yeah, totally. So there's a number of ways that you can buy properties with other partners. Obviously, you can buy properties fee simple by yourself. You can buy as a joint venture, and that's where a group of people comes in and buys property together. Typically, a smaller number of people. Each partner in a joint venture has to have an active role in the deal. It has to be managing the property, investor relations, asset management, construction management. They have to each have a role. Syndication is similar, but you can have, instead of a JV, it's called a a general partnership team. Each one of them has to have a significant role in the management of the property, and then they can bring in passive investors from their networks. A syndication can be one general partner and one limited partner, but it's a very common way for people to get involved completely passively. So that's what we offer at this point is is a syndication structure. So people can come in with as little as 50 to 100,000, and they can get involved on some of these bigger assets.
Okay, great. So it's because I think for a lot of people, if they think about investing in real estate, they think of the headache that might come with managing tenants or the legalities or the taxes or all of that. So it's a way to access the benefits for the investor without needing to deal with all of the headache.
Totally. Yeah. No tenants, toilets, or termites is a common marketing term with syndicators. And the nice thing is that as an LP, you can still take advantage of some of the massive tax benefits. Typically all of the depreciation flows through to the LPs. So it's a very good structure, which became more available to people after the 2012, some legislation in 2012. And it's a way for people to get involved with a smaller amount of money, which I really like from a diversification standpoint. You can put 50 or 100,000 into a deal, and you can afford to lose it, and it can just sit there, and you don't have to think about it. You can focus on your business. So I like the model. I think probably the biggest issue with the model, I feel, is I heard the term, it's ripe for fraud. And I feel like there's definitely some of that. Personally, I haven't seen it, but there's a lot that hinges on the integrity and values of the lead sponsor on a job, on a deal. So that in the general partnership team, there's typically a lead that actually sources the deal and ends up putting the team together. And a lot of the success of the deal hinges on the integrity of the operator. So that's where, we talk about being in a trust business, and it's definitely a trust business.
That's interesting to hear. It's ripe for fraud. In the last maybe several years, I think I'm arriving at a position where we can't really turn off critical thinking without consequences. I would go as far as to say that everything is ripe for fraud. I think we want to believe that if someone has done A, B, C, D, all the way through, that they will also do Z, but then they don't. And it's like, oh, joke's on me. Like, because everything has like a cost and benefit. So if I have to grind for 12 years in order to get this certificate or this license or these letters or this network that then signal to you that I'm trustworthy, then I can let my mask off. And it just would blow the mind for someone that someone would be performing for 20 years and not be authentic. And it's like, there's so many like variables in our environment that you never know. And that's why I think it's important to be curious and to have a compass and to have a network. And yes, I'm not saying that like, if it's like one-on-one in a dark room, that doesn't allow for more variables than having a license board and like different checks and balances, but everything is gameable. Absolutely everything, totally. I believe, is gameable. And so it's and each has like a different cost, because when you go into a place that you trust is going to be like, oh, look at this fancy building, like no one here must be lying. And it's like, yeah, just each thing has its unique qualities. But yeah, I thought that was interesting. For people listening that feeling trapped in their business, what's one thing they can do this week to start moving toward freedom?
Ooh, I like this one. Um, a big thing that helped me in my business was SOPs. SOP is a magical acronym, standard operating procedures. Start thinking about what you do on a day to day, and what your employees do on a day to day, and start writing down everything. And from that, develop standard operating procedures. When somebody messes up, figure out what went wrong, why did it go wrong, and how can we prevent this next time. And there are limits to it, I suppose, because humans are messy, right? But that was huge in my business. When we sold it, actually, the guy that bought it was surprised with the number of SOPs. In that industry, you don't see that as much, and so that was big. I would say, I've heard, I haven't actually done this, but I have heard if you write down what you do like every 15 minutes or something, and figure out where your time is going, that can help a lot too. So maybe that'd be a good idea too, but I can't speak from experience on that one.
Fair enough.
I think probably scrolling on social media would take up a lot more time than I want to write down.
You gotta watch the social media.
Yeah.
Sure.
Seriously though, I think it's kind of a different topic, but with food, and this has come up in a previous conversation, but I think it bears repeating. You have your USDA, your ingredients, and it's now like a federal law. Is it also, Becky, in the UK where you have to have the ingredients and like what things are made of?
Yeah, and like the calories and all. Yeah. Mm-hmm.
But they don't do that with our visual diet, with media. Social media is just nonstop sugar from the fountain.
Totally.
And it's like no negative consequences could come from this.
Yeah. What could possibly go wrong?
Yeah. So that's where, it helps to have like somewhat of a community checks and balances, because sometimes you're early and there isn't yet like safeguards.
Mm-hmm.
Not all of us made it this far. Like many of our ancestors didn't make it. We lost many cousins and the Neanderthals, etc. And it's like there were some lessons. And I think that we're losing parts of ourselves by not being as aware of our environment as we could. I spoke to a gentleman that mentioned restraint with social media, and it just blew my mind. And it's like, now it's like, how did I miss that? How did I miss that we were supposed to have restraint with something free and something enjoyable? Well, I guess that begs the question, like, do you enjoy it? Do you enjoy talking everyone's ear off about the next, like the 10 travesties you saw, yesterday, and the 10 more you're seeing today? And is this a life you enjoy? Is this who you want to be? And so I think it's just an orientation device, or going back to the compass analogy of figuring out, like, where am I going? I'm in this coaching class. Fortunately, it finishes in 2 days. It's been 6 months. It's one of the hardest classes I've ever taken. Really, really good though. And the professor always says, like, we are becoming. We're only becoming. And I really like that because it's freeing. It's not like you have to turn in your report card. It's like, just, now what? What happened before, whether you did it or someone else did it, doesn't necessarily define you. It's just data. And what do you do with it? Well, how are you going to channel it, use it, learn from it, grow from it? So
totally.
Just wanted to share that.
Yeah, I love that. And if you like, don't get me started on social media. I will share this though. So I've got young kids, and so that just having kids to me brought about the conversation. What are we going to do with technology? And I was going to say, I should have said, what's one thing you can do to not feel trapped in your business? Like, just download download the ClearSpace app or another app. I don't know. We can't promote probably different apps, but download an app that'll limit your screen time on social media. Like start there.
Yeah.
But how crazy is it that we're at a place in society where we pay money for apps to limit our time on our $2,000 iPhone device? Like it's a wild time in history. But I digress. That's not really business, but it's just interesting. Just life in 2025,
Mm-hmm. And it will
I
likely get crazier.
Yeah. Yeah.
Here's hoping. You mentioned masterminds earlier, and that kind of overlaps with coaching somewhat and what we're talking about with having different data points, kind of checking what you're seeing. I might see something. Becky and I have back and forth sometimes, like, here's how I'm interpreting it. And she'll kind of open my mind with a different perspective. What are some like masterminds that you're in, and what's something that you've kind of appreciated about being a member?
Well, I'm in 3 different ones right now. One that I really like is they're all pretty much real estate or capital raising related. I'm in the Better Life Tribe, which it's real estate focused, but it talks about building wealth through real estate without losing your soul is kind of the big thing. And I actually have an accountability coach through them that I meet with once a week. And I love, it's interesting. I got a guy our values are pretty similar. And so he helps me stay on track with different, you are what you continuously do, right? So talking about social media. So he keeps me on track with some of the habits I'm trying to develop, and some of the, you don't really, in the real estate industry, there's not too many people that have a real estate degree, but it's an ongoing education thing. So I'm always trying to learn, whether it be underwriting or broker communications, investor communication. There's these different ongoing education that I'm trying to pack in. So he keeps me accountable on that. I'm also in a multifamily syndication group. It's called the Warrior Group. It's Rod Khleif's Warrior Group. There again, kind of found a group of people that several of them have similar values. I've developed some warm friendships there. And then I'm in a capital raising one as well called Raise Masters, which is just really, really, really focused on capital raising itself and investor relations, and been some really good contacts there as well. But it's all, they're fairly business, in real estate focused. But yeah, I've enjoyed it. And I, when you're first thinking about a mastermind or thinking about joining a group like that, there's always the fear of looking like an idiot, wasting, tens of thousands of dollars on a deal like that. But, for me, I'm trying to build a business that's, multiple 7 figures. And it's like, that ends up being a small investment if you take it seriously and build the relationships that you are possible through that. It becomes a very small investment down the road. So that's how I view it anyway.
Becky, do you have any last questions?
I would, but I have to jump for another call in like 3 minutes. so
Right.
I won't.
Forcing function. Elijah,
yeah.
It was a pleasure. Is there anything that we didn't touch on that you'd like to highlight?
I don't think so. This has been such a fun podcast for me, and I hope you guys enjoyed it as well. It's just, yeah, it was a pleasure visiting with both of you.
Likewise. Thanks for coming on. And I should ask, where can people go to keep in touch with you if they want to reach out or like follow you?
Yeah, so I have a website, legacywayholdings.com. Go there if you want to keep in touch. There's a sign up form for a newsletter. I'm active on LinkedIn, and I have a Facebook account. Working on that, but those are the main ones.
Great. We'll put them in the chat. Thanks.